All right, let's talk a little bit more. We've got other accounts, other concepts. We've got the accumulated earnings and profits in an S-Corp that is converted from a C-Corp. Now, every S-Corp is converted from a C-Corp, but unless it's converted on that same day it was established, you're going to have this period where you were a C-Corp and then you become an S-Corp. Now, when a C corporation converts to an S-Corp, the accumulated earnings and profits account of the C-Corp becomes an important consideration. This A, E, and P, these acronyms, I'm losing my mind with them. I hope you're not as well, but you kind of see these here. It represents the company's accumulated taxable income, and it's used to determine the tax treatment of distributions to shareholders after the conversion. So this is quite similar to what we talked about with the AAA, just dealing with the different terminology. I don't want you to see any terminology on the exam and not know what's going on. So the A, E, and P account is important because it affects the tax treatment of distributions made after the conversion. If the balance in the account is positive, distributions made to shareholders after the conversion are considered taxable as dividends to the extent of the balance in this account. This is because the earnings and profits accumulated during the C corporation years were subject to double taxation, both at the corporate level and at the shareholder level. So essentially what this slide is going over is a combination of the built-in gains tax and the AAA account. It's kind of saying we've got that AAA account, which is, it was retained earnings prior. We are dealing with kind of that clawback when you were a C Corp, you're being taxed on that money. So that's what's going on overall here. On the other hand, if the balance in that account is negative, distributions made to shareholders after the conversion are considered tax-free returns of capital until essentially the basis account is brought back to zero. This is because the accumulated losses of the C corporation years were already taxed at the shareholder level and thus are not subject to further taxation. Make sure you are comparing this to what you saw in C Corps. Super important. You'll see sims that compare all the different types of entities. All right, you got a few more slides and we'll call it a day, and then we'll be able to move on to our next S-Corp lesson. It's just a mouthful. It is a lot, but you got this. You can do it. I have faith in you. Keep powering through. ABC Corporation was a C corporation that converted to an S-Corp on January 1st of the current year. At the time of the conversion, the balance in the AE and P account was $100,000. Now, during the year, the S corporation had taxable income of $50,000 and distributed $30,000 to shareholders. In order to determine the tax treatment of the $30,000 distribution, we first look at the balance in that account. Now, since the balance is positive at $100,000, we know that any distributions made to the shareholders are considered taxable as dividends to the extent of the balance in the AE and P account. Therefore, $30,000 of the distribution is going to be considered taxable as a dividend. Next up, we need to determine the tax treatment of the remaining $20,000 of the distribution. Since the balance in the AE and P account is positive, we know that the remaining $20,000 is considered a tax-free return to capital only after the entire balance of the account is depleted. Now, if the remaining $20,000 exceeds the balance of the account, it is considered taxable as ordinary income to the extent of the shareholders' basis in the S-Corp stock. Again, we're seeing the similarities of the tax treatments of distributions similar to what we saw in C Corps. Always making comparisons, always bringing other lessons to light. In this example, the $30,000 distribution is going to be considered taxable as a dividend, and the remaining $20,000 is a tax-free return of capital until the balance in the AE and P account is depleted. Now, in summary here, the accumulated earnings and profits account, I never want to say that term again, just non-stop, over and over, of a C corporation that converts to an S-Corp is an important consideration for determining the tax treatment of distributions made after the conversion. It's like, again, dealing with the buckets and dealing with what type of income or gain you'll recognize, but on steroids. If the balance is positive, distributions made to the shareholders are considered taxable as dividends to the extent of the balance in the AE and P account. If the balance in the account is negative, distributions made to shareholders are considered tax-free returns of capital until the balance is brought back to zero. All right, one more big, beautiful example here until we call it a day and wrap it up with a nice summary. Let's consider an example of an S-Corp, which we'll call Tech Solutions, Inc. The company has 3 shareholders, Alice, Bob, and Carol. The ownership percentages are as follows, so we got those there. We'll reference them as needed. In the tax year, Tech Solutions has a capital loss of $50,000 due to the sale of a business asset. Now, since an S-Corporation's capital gains and losses pass through to the shareholders, each shareholder is going to report their respective share of the capital loss on their individual tax return. Capital losses will be allocated as follows. Right? We are going to see that we have the total of $50,000, and we're applying all of those ownership percentages. Alice, Bob, and Carol are each going to report their respective capital losses of these amounts on their individual tax returns. These losses can be used to offset capital gains, or if there are no capital gains or not enough to cover the entire loss, a portion of the losses may be used to offset ordinary income, subject to any certain limitations. Any unused capital losses can be carried forward to future years to offset future capital gains or ordinary income, again, subject to certain limitations. And all those limitations, that is what we talked about in our individual income taxation lessons, dealing with loss limitations, remembering how all this ties together. Because even though we are now here in our entity lessons, corporations, S-Corps, partnerships, well, as the individuals, they're receiving distributions, income, everything from these entity types. So it all ties together. All these wonderful taxation lessons, they tie in. Super important. Make sure you are understanding and having that big brain sort of seeing everything all at once. There's a lot to go through here, but I have faith in you. You can do it. Let's wrap it up and call it a day. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.